Hello and welcome to the next episode of the Option Plus podcast. I am very excited about this episode because I'm talking to Philip from 10.10.1, and this project is something that I wanted to build myself for a long time. So I really hope that you enjoy this episode. We talk about derivatives, about why they are not just for gambling, but they're actually a very useful financial primitive to have in your parallel financial system. And 10.10.1 is a very nice project that enables trustless financial derivatives on top of Bitcoin Lightning. And this project means you can have a Lightning wallet with a US dollar and hopefully in the future some other types of balances such as euro or whatever, Czech crown or anything else. So I think currently on Ethereum, the killer use case is stablecoins, and with projects such as 10.10.1, we can bring this killer app back to Bitcoin and back to Lightning in a very interesting way that has some very interesting unintended advantages, I would say. And I will not talk too much about the project because Philip will explain it much better than me. So enjoy this episode. Welcome, Philip from 10.10.1. I'm really excited that you accepted my invitation to this humble podcast with a few listeners, but I'm very excited about what you're doing about the project. So I would like to share this with people and hope that people know what this project can bring to the Bitcoin and Lightning ecosystem. So maybe let's start by you telling us something about yourself first, and how did you end up doing this project, and then something about 10.10.1.
Cool. Awesome. Well, thanks for having me. I'm super excited being here. A little bit about myself. Let's take a big leap into the past. I got into Bitcoin relatively early and I lost my money at Mt. Gox. And that kind of branded me. And I made it my mission that no one should have to feel that pain themselves. So I really wanted to solve the problem of trusted trading, get rid of the trust, because Satoshi gave us this magic wand of decentralized trustless money. And all we do is we add trust on top of it. And if you want to trade today, whether it's derivatives or spot, you have to trust someone else and you have to deposit your money in someone else's wallet. And I just want to get rid of that. So we started as a research lab in 2017 or 2018 with the focus on cross-chain atomic swaps. And we did all kind of things from Ethereum to Bitcoin, ERC20 to Lightning. And then later we did Monero to Bitcoin, which was really cool because you don't have any scripting language on Monero. And they have a different curve. So we had to do cross-curve adapter signatures, which was quite fun. I think it was Bitcoin Magazine who credited us that Monero moved 20% when we launched our POC. I'm not sure if we ever really the cause for that, but the project is still being managed by the community. That was really cool. But we left this and then said we want to build something for Bitcoin on Bitcoin. And we learned over the years about adapter signatures and then jumped onto DLCs. And since we don't have any tokens on Bitcoin, we said, okay, derivatives trading it is. And that's how we started with derivatives trading. Still the same mission, get rid of the middleman, get rid of the trust, let people really trade peer-to-peer, and they don't have to account for the counterparty risk when doing so.
Yes, that's a very. I resonate with this mission very much. I would like to share how we met. Actually, it was quite mind blowing to me because Pavel Rusnak, stick from Satoshi Labs. He was organizing this Dev Hack Day before BTC Prague in Prague. And he knew that I was doing something with derivatives, and I'm teaching people how to use it, how to hedge position if they want to be like local peer-to-peer OTC traders, because I think this is the way that the adoption should be, from bottom up and not through centralized exchanges. But of course, the OTC traders need a way to hedge the risk of exchange rate fluctuation in some way, and they would end up at centralized exchange. So I was first of all, I tried to explain to people that derivatives are not pure gambling, or like that they are really useful for something, including this use case. But I also wrote a paper with René Pichard on DLCs on top of Lightning for this specific purpose. But then I was participating in this project that wanted to use it. Anyway, so I was kind of like, okay, I'll explain to people. Hopefully someone will build it. And I think you were right next after me, or two talks after. And you did your presentation explaining how you build it using the the exact same technology. I don't think you heard about our paper actually before. Is it
I
true?
did actually. I read this
Yes.
paper a long time ago. Yeah,
Oh, all right.
it's been quite old, right? Or it's
Yes,
like
yes, yes, yes.
2020 or maybe earlier.
Earlier, I think even earlier.
Yeah,
So
so it
it's
was really early. Actually, I was really surprised when I saw your talk, and I really liked the opening. I think you said something like trading is not degenerated or something like that.
Mhm.
And
Yes, yes.
it totally reflects what feedback we get when we launch our product or when we go out, because Bitcoiners are always correctly very careful when they say trading is okay, because we have this shitcoin trading on the other chains, and that is, I mean, you can make money with it, but most people opinions is that trading is more for shitcoinery, but it's not true. As you said, it's actually, particularly derivatives, is more for the risk averse people who are like, they want to hedge, they want to protect, they want to have a downside protection if the Bitcoin price crashes. And that's really cool. If you have that, if you understand that, then suddenly trading makes so much more sense.
Yes, I don't even like to use the term trading, because that has this connotation that you said. I like to talk about hedging risk, or creating like a position that has a meaning in real world. So one of the position would be hedging the value in fiat currency, for example, US dollars. So, give us maybe an explanation of how would you say what is this kind of synthetic stablecoin that the project provides, that the wallet provides, and how is it different to other types of stablecoins such as Tether or DAI, or any other type of stablecoin?
Whew, jumping right into that. Okay. So we want to get rid of most of the counterparty risk. Obviously, there is no such thing as completely trustless and completely riskless. So there's always some trust you have to put somewhere. But you can remove counterparty risk to some degree. And for that, we wanted to remove the token and the token issuer. And we found that if you short Bitcoin, you are stable in US dollars. And the financial instrument there is a inverse perpetual swap, or also called a CFD. And with this, if you short this, you are stable in US dollars. And with a few tricks, you can make this transferable. And suddenly you have a synthetic stable coin on Lightning. And that's really cool, because now there is no trust in a centralized token issuer who can then disappear, or a basket of assets you have to calculate on. No, it's just Bitcoin and the Bitcoin price.
Yes, it's also very capital efficient. So most of these stablecoins that try to be as decentralized as possible, they are over collateralized by some other cryptocurrency, which in this case is not the case. So I would like to mention so how it looks in practice, both in your wallet, but there was, for example, Collider wallet, which used to do something similar but in a centralized way, but also Chivo wallet, which is used in El Salvador. So, which is also centralized, by the way. They hedge it on some centralized exchange. But what it means is um, that if you own Bitcoin, and uh, feel free to hop in if you would like to explain something better. If you own Bitcoin, you are long Bitcoin. What that means that if Bitcoin goes up and you own Bitcoin, your wealth will go up. If you at the same time open another position in the same size, a short position, then basically if Bitcoin goes up, you will earn money, but the short will take away the same amount of money. So you end up with Bitcoin that are worth exactly the same dollar value. So that's the principle. So you said you short Bitcoin, which like people like, oh no, please don't short Bitcoin. But you're not actually having a short position because you also own that Bitcoin that you shorted. So you are long and short at the same time. Um, so this is basically how I would explain it to people. What is interesting, how it shows up in all these wallets in practice, in 1010 in Collider wallet, and in Chivo, is that you see that you have a balance in Sats and you have some other kind of balance in US dollars. So you can see, okay, I have $10 and whatever 50,000 Sats. So that's how the user interface shows it. But what is interesting compared to any other like tokenized wallet, like with the stable coins on top of Ethereum, that there is nothing else than Bitcoin. There is like it's not a token. The thing that you own in your wallet is actually Bitcoin, but the amount of Bitcoin changes based on the open short position. So that's how I would explain it um, to people who would ask me like, okay, what is going on? Like, where are these tokens? What's the token standard? I would say, no, there are no tokens. You are just making sure that your Bitcoin is worth always the same dollar value for the hedged position. So
You
yeah.
said that you're long and short at the same time. I think you're only short in this particular case because you need a counterparty who is long against you.
You are long in the fact that you own that Bitcoin.
Right. Okay. Yes.
And
Okay. You
because
don't. Okay.
owning something is long, and of course the short position has a counterparty which is long.
Yes.
So that is, by the way, also useful. I don't know if we should get into it, but who would be the counterparty? Because you need to find a counterparty. It's not magic; doesn't magically
Yes.
appear from the thin air. Um, so there are many people who would want to be long future and not spot Bitcoin. First of all, if you only want to get the upside without the initial investment, it's a nice way how to basically leverage with lower capital requirements. So that's my answer to people who would say, "Oh, Bitcoin is too expensive now," and like I don't have whatever $20,000 to buy one Bitcoin. Then of course I explained that you can buy satoshis, um, but if you only want to be exposed to the upside and downside, to the swings, and not to the initial investment, then this might be quite useful. But another thing that is quite useful is that you can create a synthetic loan from the long position. So if you want to borrow dollars, you would basically spend Bitcoin and then open the long position, and you are long the same amount of Bitcoin. So your exposure to Bitcoin is the same, but you have created a loan. This is interesting because I think if you do this in a nice way from the user interface, this might not be considered a taxable event, which is one of the use cases of these collateralized loans. But this is another thing that is very very useful. Uh, when we were talking about it with the team that we were working on the project, I like the thing that I remember when these people who are good in financial mathematics were explaining it to me. They said that it's like Lego bricks. Like if you have a future, you can build the whole financial system. Every derivative can be built from futures. So loans and synthetic stable coins and like synthetic positions. And if you have a ability to do it in a dynamic way, you can also create options. So this primitive
Yeah.
that you built in 10.10.1 basically allows you to create the whole financial system as we know it just from this simple primitive, and it's interchangeable. So if you have collateralized loans, then you can build futures and again the
Yeah.
whole
That's I
financial
don't
system.
I don't have a finance background, but for me
Me
it's
neither.
every new day is mind blowing. It's exactly what you said, that with the future you can build so many things, and that if you are leveraged long, it's basically nothing else than a loan where you borrow some money from someone at today's value. The Bitcoin price appreciates, and then you return it at the future's value. And that's why the short position, your counterpart, is stable in US dollars. And it's like, so
Yes.
this is actually a loan. And then it totally makes sense that you suddenly have funding rates and interest rates in this instrument. And this,
Yes.
yes, it is really mind blowing what you can build. You started talking about where does the other side come from. So in
Mhm.
our case, we have a peer-to-peer marketplace. So the other side can be another pleb just like you who wants to go long on Bitcoin.
Yes, which is very useful. I like to be on the long side more than on the short side. By the way, what you can create with this, which is I wanted to talk about visions basically at the end, but let's tackle this one right now. What you can do is you can basically build a Lightning enabled credit card. So you would never spend your Bitcoin. So right now, when you go to 10.10.1 wallet, you see sat position and like $10, a dollar position. Um, you can do it the other way around, that you have sat position and you have minus $100 because you bought something for Lightning, but you don't want to lose the exposure. So you can go on the long side and create a loan. So when you're spending, you are a good hodler. You're not not spending your precious sets. You're shorting fiat. If you're long Bitcoin uh, in a pair with fiat, then you're automatically short fiat. So you're on the good side of inflation because the fiat depreciates. So when you return it in the future, it will be less valuable. You will have to work less for it in the future. So I think this is also an interesting way to look at it, and it can be just a user interface thing to create like this infinite, not infinite, like credit card limited by your credit line, basically
Yes.
limited
Yeah.
only by your collateral, and you can basically spend without the guilt of of like getting rid of your sets, and you can actually support the Bitcoin economy while keeping your Bitcoin position at the same time.
Yeah, that's really cool what you just said, because now you actually turned the stable coin around. Instead of having
Yes.
person who is short is stable. Actually, the person who was long is stable and took out a loan and went on spending something, but now eventually he has to return that money. And it's like, as you said, it's like build so much stuff on top. It's really cool. I would really
Yes.
love to see the connection to the fiat world, where we add some credit or debit card, and you can just go anywhere and pay with it. But at the end, it's your
Mhm.
Bitcoin, and you're still long on Bitcoin.
Yes, yes. But even without like because Lightning is a pretty good payment network, so you don't need to use it like through the credit card network. You can in many places just pay with your wallet, but you're not. You're basically doing the same thing as a credit card. I mean, real debt-based credit card when you borrow money from the bank. In this case, there's no bank. There's only your counterparty, which you don't have to trust. And they don't have to trust you because you have the collateral, and it's all nice. Um, so this is very interesting because you basically built a Lightning wallet. That's what it is, with one primitive, which is inverse perpetual swap. And now you can be doing stable coins, you can do loans, and you can do all these magic things with just tweaks to the user interface. It's still
Yeah.
the underlying primitive is still the same. So that's why I'm excited about this project. um, Quick question: what are the fees? And then we can go to the like trust assumptions and like who do you need to trust and what happens if you turn off the project and so on.
If you turn off the project, yeah. So the fees, the setup we are having is somewhat of a star setup, where every user, every trader has a Lightning channel with us. And that's mostly out of the reason for capital efficiency, because it wouldn't be very capital efficient if they have a channel open with all other traders. Because then unless you can do some multi-path atomic DLCs, it's more efficient if you have all the money in one single channel, which means we are a LSP, liquidity service provider, and we are forwarding all the trades. So if a trader maker and a trader want to trade against each other, then they go trade with us and we trade with the trader, and then implicitly they trade with each other. And the fees we are charging there is a liquidity fee, same as in the Lightning network. The fee rate itself, we don't know yet. We need to figure that one out.
Yes.
But I would say it's along the line a normal liquidity fee as forwarding payments on a Lightning network. Um,
Yes.
you ask what happens if we disappear. Well, if we disappear, hopefully someone else jumps in and runs this. We call it a coordinator. You will not lose any money. It just means that your position will be, you need to go on chain and get your Bitcoins back. Same as on a normal Lightning channel. Force close the channel if your channel partner disappears, and after a timeout, you get your money.
Yes, there's an additional closing of the DLC. So
Yes.
that's what maybe we should say, that it's not a normal Lightning channel. You cannot open a Lightning channel like this with whatever Alan Big or Breeze or any other node. It needs to be aware of the DLCs. So that's why it probably makes sense to do this star architecture because
Exactly. Yes. Yes. So it's a technical limitation. Today we have that only our implementations understand DLCs.
Mhm.
But in the future, I see this is interoperable with LND, C Lightning, and Eclair. So it's hopefully we get there.
Perfect. What Lightning implementation do you use, by the way,
We
under the hood?
build on Rust Lightning on LDK.
Hmm. Hmm. Perfect. Then there are what are the other trust assumptions? Someone has to publish the price of BTC in USD terms in case of
Yes. So
BTC
they
USD.
exactly. So we were talking about that it is a perpetual swap, but the technology under the hood is a DLC, discrete log contract, and that's where we need a third party or multiple third parties called an oracle. It could be a single one, or it could be a subset of like multiple, like 2 out of 3 or 3 out of 5, and so on. But these are trusted entities, and they
Mhm.
have to attest to the price. And whatever they use, you trust that they attest to the correct price and don't just cheat or disappear. A In the future, what we are thinking of, that a centralized exchange could play this role because
Mhm.
they're already publishing price feeds. They would just need to attach signatures and some keys to the prices, and then suddenly they become a price feed.
Mhm.
And right now, we run the Oracle, but
Yes.
that's just for temporary reasons.
Yes. Well, the exchanges already signed the prices actually with their TLS certificates. If you retrieve it through HTTPS, but you cannot use it
True, yeah.
in the Oracle. What is interesting about DLC technology, what I like about it, is that because what you could do is you could have an Oracle that would be just a multi-sig counterparty, and they would sign a particular transaction out of many of them based on price. So you would have a like 3 of 3 multi-sig, let's say, and they would just add signature to that particular transaction that matches the correct price. But in this case, with DLCs, what happens is that they don't need to know what they're signing. They're only publishing information, so they cannot cheat like me in particular, because the signature applies to all the DLCs. They don't even have to know about my DLC. It's private between me and, in this case, your node, basically.
Exactly,
So
yeah.
so
That's
no
a
no
that,
one.
that's one of the important principles of DLCs, that the Oracle is completely independent and doesn't even know that there is a contract. In fact, no one else knows about the contract. That's why it's called discrete. On chain, it is just a multi-sig, or once we have PTLCs, it's just a single pub key, and no one knows what's even happening there.
Yes, so that's very nice, but of course there is some trust involved in the fact that the Oracle needs to publish the right price. So let's compare 10.10.1 to DeFi. What are the differences to these kind of smart contract based like loan platforms and stablecoin algorithmic, not algorithmic, like
Hmm.
collateralized stablecoins? Um, I I can begin. You can begin if you.
No, yeah, actually,
Yeah.
you started earlier talking about that DLCs, or the synthetic stablecoin using DLCs is very capital efficient.
Hmm.
And just yesterday in the team, we compared it to Maker and MakerDAO. And it took us a while to really understand what's in Maker happening. But the person in Maker who takes a loan, or takes yeah, it's a loan in DAI, he's actually long and short in the same position. But meaning he holds two positions at the same time. And only at the point of time when he gets liquidated, when he's in the danger of losing his money, someone else has to come in and takes the short position. And then he
Hmm.
keeps whatever is left. That was quite interesting, but it's not that capital efficient for the user who wants to take the loan, because he has to over collateralize. And if you compare those two use cases, though, the capital requirements are the same. It just happens that in our DLC approach, someone else takes the long position, and you, who wants to take the stable coin, takes the short position. But overall, it's the same amount in collateral.
Aha. Okay. Interesting. I never thought about it this way. It's a very interesting distinction.
Yeah.
Uh, what I find interesting is that even though it's the star architecture. It is a peer-to-peer contract. So in case of DeFi, I call it peer to smart contract. So usually there is like a huge pool of money for collateral or for anything locked in the smart contract, and you interact with the whole contract. So usually there is like a pool of liquidity, and what that means is that if there is any kind of issue, if like there's a bug in the smart contract, everyone has a problem at the same time. In this case, it is truly peer-to-peer, even though in this case, like the peer in the middle is always the same. But my contract with your node is different to your contract with the node, and they're not related in any way. So
Yeah.
the only thing they have in common, of course, is the oracle. Of course, if that fails,
Yes.
then everyone has a problem. Not necessarily, but it could be the case. Um,
I really like that feature. It's an inherent feature of Bitcoin itself that you have UTXOs and not accounts in that sense, or smart contracts. You don't have these gigantic honeypots where then the developer need to build in a backdoor just to be ready to fix certain bugs or roll out upgrades. No, that's you have a single UTXO, and if there's a bug, yes, there might be some lost money, but the damage is contained in the single UTXO. And every new position is a new UTXO, meaning we can roll out updates to every new position and fix them independently. That's really cool.
Yes, and in case you're building on top of Lightning, the UTXO is not even known by anyone but the peers. So that's another feature that
Yeah.
it's not a honeypot that's on chain that you could exploit. But unless one side chooses to force close the channel, no one knows. No one even knows about the contract itself. It's just
Yeah. Yeah.
it
So
doesn't
even
doesn't
if you
move.
go on chain, you would
Yes.
have a hard time finding it.
Mm-hmm.
So it's only the two parties involved might be able to find a loophole in there or a bug.
Okay. Next thing I wanted to ask about is about your team. Like, if you have funding, or like if you're just independent organization, or how do you operate, and how sustainable the project is, the
Sure.
development, and yes.
Yeah. We started with this project actually quite some time ago. Don't quote me on the dates, but I think it was 2021,
Mm-hmm.
maybe 2022. With the project was called Ichisats,
Mm-hmm.
and this was our first attempt to bring derivatives trading to Bitcoin. And we launched Ichisats as an app on Umbrel and Raspberry Blitz and Cloud9, and I don't know what else was out there. But the problem was that we built our own layer 2 protocol because of reasons.
Mm-hmm.
And it was not compatible with Lightning. So
Mm-hmm.
we were completely isolated, and we were targeting a very niche of users who are technically capable of running such a node.
Mm-hmm.
And only last year, just about a year ago, we joined the Legends of Lightning tournament, which was an online hackathon. And we said, we're going to time box this now and try to bring this feature to Lightning. And we have 8 weeks to give it a try and then bring it to Lightning and mobile. So we literally started from scratch, threw everything away what we had, kept just the knowledge, and built on Rust Lightning and mobile, and built a little POC in within 8 weeks. And it was not just us who thought this is awesome. There were
Mm-hmm.
others. We were approached by the Wolf Accelerator in New York.
Mm-hmm.
And a few months later, in April, we joined the Wolf Accelerator, who then also invested into us. And we won the Wolf Accelerator and got a good investment on top, which we
Wow.
currently have. Actually, because you asked about investment, we had some investment before that. So
Yes.
for HSATs, we had some investment. So we
Mhm.
are VC funded, and as usual, you're always looking for new investors. So if you're watching this, listening in, reach out.
Yes, but there is no token.
There's no token. No, no token.
Which is I think good in case of VC investments.
Yes. Yeah. Also
Okay.
hard. Also hard if you want to attract some investors who are like, so where's your token? How do I make
Mhm.
money? traditional,
Yes.
traditional VCs, equity.
Yes, 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 and fees and actual profit.
Exactly.
that's
Yes.
uh,
Yes.
that's yeah, that's not common these days, but I hope it comes back because I'm personally an entrepreneur and I never built a company uh, with the only goal of selling it for more to the next VC. I always was looking, okay, how do I make profit? I because in order to be sustainable, you either can always look for new investment
Yeah.
or which like companies like Uber do it this way. They're still losing money. I don't know exactly, but like few years ago, they were still losing
Yes.
money
Yeah.
for over a decade and still being funded by VCs. But I think that actually profit is a very nice feedback about if you're doing something right, if people actually want to pay for your product. So I profit is not popular these days, but it's much more difficult to fake it than the hockey charts and
Yeah. Yeah.
VC pitches. So I hope you will turn profitable
So do
and
we. Yes.
and that guarantees the long-term sustainability. And how many people are working on the project, if it's not a secret, of course?
No, it's not a secret. We are a team of six, four full-time developers, and as a typical startup, we are spread over the world. So we got one person in Australia, one in Austria. I'm currently in Austria as well, so two in Austria, one who's currently in California, and one part-time in South Africa, and one in France. So
Wow.
spread over the world.
Yes, the team building must be must be interesting.
Yeah,
um
no, we were actually quite lucky because we used to have an office in Sydney. So
mhm,
until recently, I was in Sydney, and most of the team we knew from back then. We shared an office there, a co-working
mhm.
space actually. And then only when COVID started, we became a remote first company and started to spread over the world. So I think it's going to be way harder to start a remote first company than if you know each other beforehand.
Yes, definitely. I have never done it, but I don't have a company with employees anymore, so I only cooperate with people. But I used to do it the old school way. um, uh, I wanted to ask a little bit more about the kind of regulatory pressures. I don't want to talk about regulations, but there were like many cases where developers of open source software were actually targeted because of what the software itself did. Like a good example would be Tornado Cash developers who
Hmm.
created a software and then whatever North Koreans used it allegedly, and then the developers had a problem because someone used an open source software from the internet. So that's kind of one point of view. Like if you perceive this as a problem, and another one is of course the product that you are developing, because it is quite difficult. Like when you open the wallet, it tells you you have $10, but actually under the hood it's a DLC. And like if you look at it from the regulator's perspective, For example, EU is trying to regulate stablecoins, and
Hmm.
I don't think it's quite clear if it's a stablecoin or if it's just sending bitcoins back and forth based on the changing price, or like what it is that you're actually own in the wallet. So
Yeah,
uh,
it's
gonna be
very, very
mind fuck for
complex. Yeah.
yeah, it's a mind fuck for the regulators. But like, what's your point of view? Or, for example, if it was a loan, using the loan position, are you suddenly a loan provider? Is it like, can you put interest that you pay into expenses because you took a loan, or it's a derivative position, or
Yeah,
this
that's
Lego feature is, yes,
it's a
it's a,
very, very, very tricky question, and it totally depends on what jurisdiction you are in. Um, our understanding from our perspective, what we are running is that we don't touch any customer funds, so we don't fall into Mika.
yes. Hmm.
Um, we we are a liquidity service provider. So in the US, they are talking about that if you run like a Lightning routing node, you might fall into the money transmitter regulatory area. So we're not going to touch the US.
Hmm.
Um, for the user themselves, I guess it also again depends on where they are. I would suspect it's just a trade. You are taking um, it's a derivative you're trading, and derivatives are regulated in depending on what jurisdiction you are in. In Australia, for example, maybe I'm wrong, but I think that derivatives are not capital gains taxed because it
Hmm.
falls under gambling. And it's a big advantage. You can just trade that and don't have to pay capital gains on that.
Nice. Even considering the fact that most users might not even know that it's a derivative position, they see dollars. They
Yes,
don't
yeah, yeah,
don't.
yeah.
Interesting.
But the
So
stable coin, you're right. I mean, if the EU wants to regulate stable coins, I don't know if we are a stablecoin then. I mean, you send around sats, we just display that you are your dollar value. So it's an interesting.
yes, it's I think a very interesting question. I hope no one will have to find out in court.
I doubt it.
but
No.
yeah, well, I hope that you become crazily popular, because it's a very, very useful tool. So some people might ask questions. Many people don't actually understand one crucial things about any kind of stablecoin, is that it's no different from most of the dollars how they exist, because there is a thing that is called a euro dollar. Many people have not heard about it, but that's how actually most dollars come into existence. Euro is not named after the currency, but it was first done in Europe, and it's basically a loan that is created outside of the US. So it's not controlled by the Fed. You can look it up on Wikipedia, and this is actually the form how most dollar loans are created. So basically, if you go to an Austrian bank, if you're in Austria and you say, oh, I would like to take out a loan in US dollars, what they do is it magically appears on your account. They don't interact with the Federal Reserve. They just give you a loan on their books. It's a loan plus your promise of repayment of the same dollar value, and it just appears on the account, on the account. So that's quite interesting. And when you think about it, DAI or actually Tether or any other stablecoin uh, is the same thing. The only difference is you cannot send it through the Swift or at like old school wire networks or Visa or any other payment network. You need to send it through Ethereum, or in the case of 1010 through Lightning. but it's the same dollar. There's no difference. So that's gonna be quite interesting.
That is an interesting thing. I didn't know about the euro dollar. So if the bank issues the loan, do they then have to short or go like have a derivative at the back against the US dollar? Or what does this
Uh,
mean?
no, because on their books they have basically the resulting position is only the interest rate that you pay on the because they give you, let's say, $10,000. They credit it to your account. They need to keep reserves, but they can be in a different currency. And then you are promising to pay $10,000. So the thing that the only thing that relates to the dollar is that you are committing to repay the dollar value plus interest. So that's how it's hedged,
Oh,
because it's minus 10,000 and then 10,000 plus interest plus. So it cancels out. So on the books of the bank, it's basically just like there is risk. The risk is contained in the interest rate, but there is not much uh, um, exchange risk, basically exchange rate risk. So
but
except for the reserves.
that's then different to what DAI and Tether and USDC do because those US dollars are fungible with the traditional US dollars, right? You can send
Uh,
them over Swift.
Uh, yes, for that they need to interact with the dollar system, so they might need to buy it, and in that case,
Hmm.
they so as I said, that the only difference is in the payment network
Yeah.
that you can use it on. But it's still your promise to repay the loan
Yeah.
denominated in DAI, which is basically denominated in US dollars. So actually, the form of the loan is the same. It creates real US dollars inflation. So many people don't understand that you
Yes.
can actually print fiat on in these parallel financial systems, because when you create a loan, you can use it. It increases the dollar prices in the world. Of course, the stablecoin economy, and later, hopefully, the Bitcoin, Lightning, synthetic stablecoins are right now just a small portion of the whole dollar economy. So you don't see it, but it's funny because let's say Bitcoin explodes. Let's say it reaches the market cap of gold, which is I think around 600,000 per Bitcoin would be the
Hmm.
equivalent price. And now imagine that no one wants to sell their Bitcoin, and they are taking these loans, and they're spending it in the dollar economy, and rising dollar prices. So it can be very interesting, and I guess that the Fed could be a little bit pissed because they're not making any interest on it. They're someone is just basically printing dollars, not on paper, but as a form of electronic records. And this is much more decentralized that most people understand. I don't know, like I didn't research it too much, but the Wikipedia page about Eurodollar says that this is 90% of dollar denominated loans are made this way outside of US. So so it's not a small thing. And during the crisis right now, in I think 2020 2021, Fed was even giving the Europe-based banks swap lines, because they were afraid that this whole loan market is going to crash, and that would spill back into the dollar economy. So Fed was actually saving banks that were printing dollars outside of Fed jurisdiction, but they didn't want this problem to spread to the US. So they said, okay, we're going to save you anyway, because you're screwing our currency, and we don't want this to happen. So this is very interesting. So
It is. I need to read up on that.
Yes,
That is
yes,
it.
it's very fun read. I was talking about this on a podcast, but unfortunately in a different language, which is my native language, Slovak. But with an economist of Austrian school, and he will that is. Focused on how money works and how it's created, and it was I had like I was thinking about it, and as many epiphanies and good ideas happen in shower. I was like taking a shower and I said, shit, we are printing real US dollars. And I called my friend economist, like, tell me where I'm wrong. And like, no, I've been telling this to people all the time. You are really printing US dollars. There's no difference. Like, okay, it's not in a form of a paper with a dead American president, but these are dollars because you need to pay back dollars in the future. So, so this is very interesting. Um, uh, my other question would be, what is your current vision? Where do you want to push this? The app is in beta. Is it? Yeah,
Yeah,
I
yeah.
think you call it beta.
Maybe
Uh,
alpha or beta.
yeah, yeah, yeah.
Somewhere in between. Yeah, so we are currently in a closed beta where we onboard users every week, and we really want to be very careful with adding more users because we really want to make sure that no one loses money. Unfortunately, we did have those cases where we locked up money and we can never ever get it back.
Mhm.
How was it? How was the quote from Satoshi? It's a donation to everyone,
Yes,
everyone
yes.
else. Yeah, so we are maybe more in the alpha state where we make sure that things are really stable and people can try out the app. But we are getting more confident every day, and on our roadmap is in Q4 to have a public beta where we only limit users depending on how much liquidity we have, but basically it's public access. And if you want to watch this, there's actually an epic on our GitHub repo with a never ending task list. And hopefully we get there soon.
Yes, very nice. So the current state, as I'm playing with it, but probably when you're listening to this, it will be much better. But what I have, like how I perceive it, is that all the basic things work. The only kind of thing that is a little bit, I would say, not very user friendly is that you cannot change your position yet. So,
Yeah, yeah.
so you need to exit the whole fiat position and open the whole new one. So that's one thing. And another thing which I'm very curious how you're going to solve is that this perpetual swap is renewing every week currently, and you need to open the app to for the renewal to take place. So you need to
Mm.
replace the DLC in the Lightning channel, and that's interactive. You need to open the mobile app, and when you don't do that, you lose the hedge. So you basically convert back to Bitcoin. Nothing too bad will happen. You will
Yeah.
be more long in Bitcoin that you were, so it might be a good thing actually. But this is another thing that is like that I would like to somehow see solved before kind of like a mainstream adoption.
Yeah, yeah. So maybe first about the state. So the features we currently have is you can go long and short on Bitcoin, and we have an extra tab where you can be stable in US dollars. And currently we are working on making the position resizable. So exactly the feature what you said, that you can add more or remove parts of your position, basically increase or reduce it. And we also want to focus on the stable coin to make it transferable
Mhm.
between 1010 users. Just imagine that you hold $100 worth of this synthetic stablecoin and you send to your buddy $10. And then what's happening is that you sell part of your position at the current market price. You send the sats over the Lightning Network, and the other party receives the sats and then opens up another position, and then he's stable. And US dollar terms.
Yes. What would be cool is to be able to pay from the balance as well. So like reduce
Yes, yeah, yeah,
scan a
and
QR code, and it could ask you, do you want to pay with sats or with dollars, and then it would adjust the
yeah,
position.
and again, the cool thing is it's compatible with Lightning, and any Lightning wallet can receive those stable coins. It won't remain stable there anymore unless the wallet itself understands it. For example, we could add interoperability with Blink, when they say they show you an invoice and then you want to receive $10, and Blink immediately uses the sats they receive and put it into their stablecoin engine, and we send around stablecoins over Lightning.
Yes, that would be really cool. That was one of the things that I have in my notes that I would like to see. I have seen very cool case study by BTC Pay Server recently. They released it. And I love BTC Pay Server. It is amazing. I use it a lot. And what they did is they have a plugin called Lightning Prism, where you can direct part of the Lightning payments to different destinations inside of the BTC Pay server or even outside. And what they did is they created basically um, uh, like a configuration setting where you could say, okay, I'm a merchant. I know that my margin on, let's say, coffee, I sell coffee, and I know that I want 80% is my cost to make the coffee. So I want that in stable value, in stable coins, and I would keep the profit, which is the 20% in sats. So what it does on the background is, as the merchant receives the payment, it swaps 80% of the value into Tether on Liquid, actually. And in this case, the merchant doesn't have to worry if they're able to pay their invoices, because they stabilize the part of the payment that corresponds to the costs that they have, and they can still keep 20% in Bitcoin to put into whatever capital reserves fund, or basically hodl. um, actually, what I would love to see is, let's say, a command line version or a version of 10.10.1 that would be possible to integrate into BTC Pay Server as a plugin, and just basically hedge it. So for merchants, they don't need to have a mobile wallet. They wouldn't have to worry about the perpetual swap renewing every weekend, because the node is always online, so they don't care, and they wouldn't have to have something else on Liquid. It would just be sats with basically the same way, but the merchant side of the user interface. So I'm very much looking forward. Maybe you do it, maybe someone else does it
That
using your
is
code.
that is really cool. Is this Lightning Prism already available, or is this an
Yes,
idea?
everything is available. They have even a
Really?
how-to on their blog. They have been doing this on, or that they have onboarded merchants this way on Baltic Honey Badger. So everyone who was paying with the NFC cards using like Allenbit's card. They were paying to the merchants, but most of the merchants, which were like food trucks and cafe sellers and so on, they were not 100% onboarded to Bitcoin. So they were like, okay, I like this fluctuates. I'm worried.
Yeah.
I will gladly make food on your conference, but I don't want your funny money because I don't trust it. I don't know what it is. And they sold the idea based on the fact that they could keep parts of it in dollar value, and that's what a lot of merchants in El Salvador do. They hedge part of the or the whole position in US dollars as merchants. They use Lightning just as a payment network because they have to, which I don't agree with that much. Like, we shouldn't be forcing people to some weird technology that that the local boss says that is cool now. But also them, they do it in El Salvador. They do it in a custodial way, and with this technology you can do it like trust minimized way, trustless slash trust minimized way. So that would be very cool, and kind of integrating this technology into BTC Pay server, and like enabling merchants to do this, I think would be
That
pretty
is a
nice.
really awesome idea. Particularly like the use case where you say you want to receive parts of your
Yes.
invoice in US dollar terms and the rest keep in Bitcoin. That is really cool. Um, Maybe we are already working on a command line version. We call it a makeup binary because we we need someone to provide liquidity as well, and that thing will have an API, HTTP API,
Mhm.
and we should look into how to add it into BTC Pay server. That would be really cool to have it there.
Yeah, they love to hack. So if you interact on their Mattermost chat, then
Yeah.
I think they will gladly do this with you and help you. They like, as I said, I love them. They're an amazing team of developers, and it's a one of the most interesting projects in Bitcoin space, I would say. So this is quite nice vision that I would like to see. We have talked about the trustless credit card. That's also cool. And the last thing, and it kind of comes back to what we wanted to build with our original project, is adding other pairs. So right now you have BTC USD. I would love to see BTC Euro, mainly because
Hmm.
I'm shorting euros, and shorting euros is better than shorting USD, because Euro is much worse shitcoin. So than USD even.
Yeah.
So I would like to be short USD, but basically what you could do is you could bring any asset in the world into the world of Bitcoin. So let's say you could have like this automatic node as a market maker that has access to a traditional finance. So you have like a connection to a broker, and basically would say, oh, someone wants to buy Tesla stock, let's say. So I don't have any Tesla stock, but I can buy it on a like through the traditional interface. I have a like a broker account. I can buy it, and then I can be on the short side with the Lightning DLC with 10.10.1, and then anyone in the world without KYC, without limitations of where they're from, or minimal investment amounts, and the investor questionnaires and all these crazy stuff, could be able to buy anything and any like quoted asset, tradable asset in the world with just a few clicks. And of course, the person that basically provides the bridge, they could make some fee because they're providing useful service. They can maybe, in some case, keep the dividends. So they would just give the exposure to the underlying price, and like keep the dividends for themselves. And this would enable like worldwide access to anyone to
Hmm.
anything in finance. So that's kind of my vision, where I would love to see this. And for this, you of course also need a real node with an API. You cannot do it from your phone. And you need like the connection to the broker as well. So these could be like basically liquidity providers, and we could uh, I don't know if overtake is the right word, but we could kind of like bring the whole world of finance
Yeah.
into Lightning and into Bitcoin, and that could be very useful. So
Yeah, you could build a whole stock exchange basically on on Bitcoin. And the cool thing is that it's settled in Bitcoin,
Yes,
not
exactly.
not US dollars or anything else, Bitcoin.
Yes, and for that, for collateral, everyone needs to buy Bitcoin. So,
Yes, yes,
so
yes.
that's also hopefully help those of us who have the real Bitcoin. Like, well, of course, I only own testnet coins because it's dangerous. Just kidding.
I don't
Uh,
have any, but if I would have any, then I would use it.
yes, 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 exactly. So that's hopefully something that will happen at some point. Of course, I understand that you need these essential features like more user friendly payments and like resizing of the position, easy renewal, dark mode.
Exactly, essential
But
features.
yes, yes. Um, but yeah, thank you very much. If you have anything else to say, to pitch to the listeners, or maybe what they can look forward to, how they can try
Just I
for
wanted
free.
to add one idea. You talked about the credit card where you spend basically your stable coin. Could also think of fiat onboarding, where you say you go to a conference and you have a little stall and people can then buy your stable coin using euros, and they're immediately in this ecosystem, but they are in the safe haven where they are stable in euros, and then can slowly and slowly, just with a click of the button, transform their stablecoin into Bitcoin and say, gonna buy 50 euros of stablecoin and then change 40 and then eventually 50. And then step by step, you are in this world of Bitcoin. That would be really
Yes,
cool.
that's an amazing idea. I actually teach this to people because um, I'm interacting with many, I would say, companies and providers, and I like to talk to providers of custodial Bitcoin because I want to know what they're pitching to their customers. And my pitch is, of course, bottom up adoption, go buy non KYC from a whatever street trader or like in whatever way, the way Satoshi intended, like private peer to peer. It's peer to peer electronic cash, not peer to bank to Coinbase electronic cash. Um, and one of the things that they've been saying, and I'm like, I try to I try to perceive what they're pitching, and I try to find solutions. And one of the good things that they were pitching is, okay, if you want to do dollar cost averaging, you don't want to find street dealers like every month. It's like people are lazy. You don't want to go out and find someone to sell you $100 worth of Bitcoin every month,
Hmm.
because you won't do it. You will become lazy. And what I tell people is, okay, so probably everyone has a fund for rainy day in fiat at home. If something happens, you want to be able to survive. If not, then just build it first and then continue with this speech. Um, and what you can do is you can just change the form of the rainy day fund into stablecoins, and then basically you are the dealer. You are just getting out of stable coins and buying Bitcoin with one click. No non KYC. You're exiting the position, which is exactly what you said. And this is dollar cost averaging for lazy people, but still non-custodial and so on.
Yeah.
So I have written a book called Cryptocurrencies: Hack Your Way to a Better Life, and there's a chapter on this which does exactly what you proposed. It's called dollar cost averaging without KYC, and that is a really good use case for people. They're, as you said, in a safe haven with a rainy day fund, and they as they want to buy Bitcoin, they take 100 euros, they put it in a sock back to the rainy day fund, and they exit the position with the size of 100 euros.
Yeah.
So basically, that buys Bitcoin for 100 euros, and they do it. And once they used all the rainy day fund, which basically transferred it into the SOC in cash, then you repeat, you do the same thing. Okay, now you once a year, once every 2 years, you find the OTC trader, the street dealer, you buy more Bitcoin, stabilize it, and then exit every month. So
Yeah,
that's
you could think this further on, not on an individual level, but also on companies, for companies. Just was it earlier this year when Silicon Valley Bank went bust? A lot of startups had their money on that bank, but you don't have to. I mean, you could use this synthetic stable coin. You are stable there. You keep your 6 months, 12 months of cash equivalent. And when you need to pay salaries, you send it to your employees. And if they are not Bitcoiners yet, they can remain stable in US dollar terms themselves. That's
yes,
a real cool use case. I'm planning to do
yes.
myself.
Yes, perfect. I'm teaching entrepreneurs these things also in Slovak language, but I promise I'll make this one also in English because it's very unique, and we do it for 10 years in companies. So this is something that I'm very excited about. I try to kind of put the entrepreneurs in this a little bit of a Bitcoin mindset, but doesn't mean you need to go full on crazy. Although I think having fiat is full on crazy
Yes.
these days. But yeah, yes, you can definitely do it on a company level as well. What we haven't said, we haven't mentioned the funding rate, but basically, what happens with these future positions is that because you need to match long and short side, sometimes there is not enough of one or the other. So these exchanges that started doing these inverse perpetual swaps, they invented something that is called a funding rate, which incentivizes people to take the position that is like not that there's not enough supply on that side, and they want to incentivize them with some kind of payment. In normal futures, not perpetual swaps, this is called contango. In the case when the price of future is higher than spot, and backwardation when it's the other way around. But what it does is that it creates a natural interest rate. And right now, and most of the time in Bitcoin, there is more demand for the long side, so the shorts are actually paid. So by this long monologue, what I wanted to say is that in most cases, on I don't know, I wanted to ask if it's the case on 10.10.1 as well, but in most cases, actually, the stablecoin position earns an interest rate, and the long side is paying it. So that's the case in markets, unless there's
Hmm.
like full on panic, which is maybe once a year for a month. It can be the other way around. But what is nice about this is that even if the companies and even if the people or your rainy day fund, if you are not in Bitcoin and you are stabilized, you're still making some interest rate on that money, which is also nice because it's trust minimized, and
Yeah. And
you
those
fight.
that so we plan to have this funding rate as well, and we'll need to show how. But there should be some funding rate just to have this technical feature in there to rebalance demand and supply. Um, I lost my line. What want to say? Oh yeah, the interesting thing is that these interest rates in the derivative space are actually way higher than the interest rates in the traditional finance world. And I would say
Yes,
that these are the real interest rates because they're based on real money on Bitcoin and
yes,
not those fake interest rates the central bank comes up with. And
yes.
as you said, it's been positive over the last 8 years with some exceptions. I think last year was a phase of like few months where it was negative, but
Yes.
generally, if you are stable, you earn interest in US dollar terms.
Yes, someone needs to pay you money if you are so crazy to short Bitcoin. So,
Exactly. Yeah.
yes. What I said that I don't like trading, but what I was doing for some time is I was doing this arbitrage of these various interest rates. So if you can borrow for 2% and then make 5% on it, then it's basically a risk-free, of course, exchange rate risk-free, I would say, profit. So, of course, the platform can go bankrupt, which is actually what you are trying to solve. But you can make this difference in the interest rates in this case, and that allows people to get them closer. And basically the differences would disappear, which would be quite cool if we would be able to kind of um, increase the interest rates in the fake financial system, in the fiat system, just by having more demand for long side of Bitcoin, and we would bring the interest rates up. That would be quite cool.
That would be
I
really cool.
I don't know if it's possible, but it would be cool. All right. I think if you have anything else to add except for
No, it's
how.
been fun. Awesome.
Yes.
And thanks for having me.
Thank
It
you.
was
Where can
good fun.
people find you and 1010 I will add the links to the show notes. But what's the best way to follow your
On
thinking?
not gonna read my pub key from Noster now, but on Twitter you find me under Bonomat and
Hmm.
1010one. It's get 1010one, but get 10101. So
Hmm.
it's a bit hard to write. And we're obviously on GitHub as well with the same handle, get 1010one, and everything we do is open source because non-custodial doesn't come with trust. You need to be able to verify the whole code base.
Thank you very much, Philip.
Thank you.
Bye
All right, man.
bye.
Bye.
Thank you for listening to this episode of the Option Plus podcast. For people who are new to this podcast, please know that you can subscribe, and I would be happy if you left a review, if you checked other episodes. I also mention quite a few interesting links, and one of them is my book, Cryptocurrencies: Hack Your Way to a Better Life. So I hope if you find the topics that we talk about interesting, that you check it out. And I think there is more to Bitcoin than just buy and hodl, and you can do many more interesting things in a business context, in a personal context, and you can play with Bitcoin in many ways that most people don't talk about. So if you want to learn something interesting and unique, and some other perspectives on how you can actually implement Bitcoin in your life, check out the book. It's available in English, Spanish, and my native Slovak. So thank you very much for listening. Bye bye.